Hello and welcome to the Super Team Podcast. After a well-deserved break that Tanmay had and I did not, we're back to recording our next podcast. And we couldn't be more excited to welcome our guest today, Joe McCann. Welcome.
Hey, thanks for having me. I'm super stoked to be here.
By the way, Akshat, this episode will be dropping after Joe announces something really cool publicly. So this is not a welcome back. There'll be other episodes that go out. So should we just get into that? Joe, you just announced, or you would announce by the time this episode is out, your new fund.
Yes.
Yes. Do you want to talk about that? We got a scoop.
Yeah, absolutely. I mean, of course, I would save the scoop for you guys. Yeah, so I have been operating in stealth for quite some time, even though I'm extremely loud on Twitter and Telegram. What I've been doing behind the scenes is launching a fund. The name of the fund is Asymmetric, and it is a liquid crypto venture fund. The way I kind of have been positioning it to people is it's actually a technology company with a fund mandate. You know, if you look at kind of the past, call it 10, 12 years in, enterprise sales, you've seen this pitch of digital transformation and all of these companies having to digitally transform, irrespective of the industry that they're in. And one of the things that I saw with kind of the venture world is that like most of them have not become really digitally enabled or technology companies like the rest of the world. And so, the core of what we're doing at Asymmetric is very technological in nature. Yes, we will be doing, early stage, early protocol, early project deals. But more importantly, I think we have a kind of unique approach to supporting founders beyond just like introducing them to a recruiter and tweeting every once in a while and writing a check. I'm kind of poking fun at some of my colleagues on the venture side to kind of egg them on to adopt my
Shots
model
fired.
a little bit. I'm just giving them shit. But no, look, I mean, I could talk a little bit about my background. Haven't been in open source for a long time, but one of the things that I've noticed in Web3 and crypto in general on the investing side is it's not difficult for founders to raise money right now. There's tons of money out there for founders that are doing anything remotely interesting and can write a line of Rust or Solidity, right? The question really that I see from a lot of founders is how do I find investors that add this big kind of air quotes strategic value, right? Where do I get the value add investor?
Value add VC fund, yeah.
Yeah. And so, it dawned on me because I'm an advisor to probably about 36 startups and protocols today. But the scope of my engagement with those startups as an advisor kind of like spans the spectrum of, hey, let's talk once a quarter to let's chat frequently in Telegram. And then it dawned on me, I was like, well, wait a second, like if I launch this fund, there's no way I can scale to 50, 100 portfolio companies. I'm one person. There's no way this is going to work. And then I thought about it. I'm like, wait a second, but what does scale? Well, software scales. And so what I am kind of offering up, what we do differently at Asymmetric versus, say, a traditional investment fund is, let's say you are a protocol on Solana that wants to create private transactions. So kind of like the similar to like what Zcash is, right? Like imagine we had Zcash on Solana. Well, on the one hand, I could just invest in the private round or the strategic round or whatever you want to call it, like all traditional VCs do. But what I would prefer to do is support the founder by running relayer nodes, right? So you need to run relayers to run, say, like a private protocol on top of Solana. And so running relayers it's effectively a web server. I have enough experience, and the devs that are going to be working with me have enough experience doing that we feel comfortable doing it. But more importantly, this is literal proof that we're adding value to you as an investor. We're basically saying like all of these decentralized protocols that are going to be launching, a lot of them will have some concept of like an off-chain worker that's going to be doing a thing. So like Mango and Drift have liquidation bots. A private transaction protocol will have relayers. These are all requirements for a decentralized protocol to maintain the health of its kind of network or its protocol. But there are very few, if there are any VCs that either know to ask that question, let alone be able to actually run a fleet of, say, relayers or liquidation bots. And so that's kind of the difference, I think, of how I'm building Asymmetric as a company is it really is a tech company with a fun mandate. But at the same time, it's kind of this clear alignment of incentives that we're doing with founders. We're basically saying like, yes, we believe in you. We're going to invest money, but we're also going to put our money where our mouth is by kind of supporting you directly by running infrastructure on your protocol.
So you just want to crush every other VC in town, because this is like an obvious, like, why would a founder just take a check anymore?
And a pack of 30 tweets.
Yeah.
I mean, look, so I have deep respect for a lot of investors in the space. In fact, the folks that are first investing in my fund are Mark Andreessen and Chris Dixon. And it's part of the reason why I kind of wanted to do the fund is that they wanted they were a big sign of validation for me. I was like, yeah, I really admire these guys as entrepreneurs and investors, but I'm not going to just do the same thing. You guys know how I operate, man. I just don't do things like everybody else does. And it's not because I'm special. It's just because I'm doing the things that I feel that are instinctually the right direction of where things are headed. And my view today is if you look at a lot of traditional venture businesses, in crypto specifically, and God bless the ones that are coming on board from the traditional side, Sequoia and Bessemer. I mean, Bessemer is literally the oldest venture capital firm in history. And they now have a crypto fund, right? Like, God bless them for getting over the line to do that. That kind of brand name or that cachet is valuable, but eventually they're going to have to run, I don't know, staking nodes. And you're seeing, A16Z and Polychain and Pantera and Paradigm, like these big, sort of stalwarts in the venture side of the business are doing that. They're running infrastructure, and like, that's awesome. That's going to be table stakes kind of going forward. And so my view is like, instead of just, being kind of on par with what a lot of the other VCs are doing, what can I do to push it forward? And I can push it forward by directly supporting founders on the specifics that they need on the infrastructure to support those protocols. And the other thing I'll note here is that the question kind of rises, well, man, it sounds like you're going to need like hundreds of engineers to do this. And the short answer is no, you actually don't. I use the kind of outlier example of FTX became a $25 billion company with 4 engineers. Instagram sold at $1 billion 10 years ago with 13 people total, right? Like, and half of them were engineers. And so I actually think that I'm a big fan of small teams. I mean, obviously some businesses require a much larger scale on the engineering side. Big fan of small teams, big fan of kind of enabling automation. One of the core business kind of principles that we have at Asymmetric is there's an API for everything. And I mean, literally everything. So like, this is HR, this is finance, this is our technology, this is our security. Everything is API and automated. And even our risk management system, that's all custom and built in-house. The project code name is God, because it literally sees everything, right? Like, all API and automated. And so my view is kind of, if you're going to be a long-term investor that's going to differentiate in the crypto Web3 ecosystem long-term, you have to have some sort of technological underpinning to your business. And by the way, this is my hypothesis. I could be totally wrong, but so far it resonates with almost every founder that I talk with.
And Joe, I can't think of anyone in particular when I ask this question, but maybe, are you looking for any LPs in, say, the India region who can help you out with, sourcing, to get your eyes on some Indian startups or in the Web3 space, people who can help you with marketing? I can't think of anyone, but just generally asking this question.
Just in case.
Are you looking for anyone? Yeah.
Well, what I'll say is 2 things. When I started my first company, NodeSource, the Node.js company, we were distributed by design. We were a remote business. So I've been doing remote work for over a decade at this point, because I think the best talent exists everywhere, not just in Silicon Valley or New York or Austin, et cetera, right? The second aspect is, I am extremely interested in India. I have made it extremely publicly clear that I actually think and I mean this genuinely, I think India has the potential to be a monster powerhouse of engineering talent and prowess, and also capital flowing into the Web3 and crypto ecosystem. So yes, the answer is yes to your question. Absolutely. Would love to build a stronger relationship with folks in India, of course. I mean, A lot of the folks that I've been talking to on Twitter and just kind of seeing what they're building in, say, the Solana ecosystem, 16-year-old kids in India, and I'm like, you're crushing it. Like, oh my God. So I'm very, very bullish long term, but yeah, absolutely. I mean, we can talk about this on your podcast, or we can take it offline.
Amazing. So, Joe, I think the internally, I was telling Tanmay when I met you, the kind of sense I got that was maybe this term has been overused lately, but it's still an apt description that you're somewhat of a sovereign individual. And I think in your Twitter bio, you have a line that says risk taking is the purest form of virtue. And so you don't have institutional affiliations that override your desire to find the truth. I guess maybe that's kind of the rough definition, which helps make people, like the successful doing flying solo, right? So can you talk a little bit about where you get that from and explain that quote?
Yeah, great question. Where do I start? I went to school. I did not go to school for computer science, by the way. I have been, a software developer for going on 22 years now, but I went to school for philosophy, and I have a focus in logic, but I really did study a lot of, I would say, more contemporary or more modern or recent philosophers. The first one I really dug into is a guy named Schopenhauer, who was pretty depressing, had some interesting thoughts, but pretty depressing. But someone who studied off of Schopenhauer that had a major impact on me was Friedrich Nietzsche. And a lot of his ideology is very consistent with Nicholas Nassim Taleb. And so Taleb has written these books. One of them, I've read all of his books. I'm a huge fan of his writing. I'm not a huge fan of his views on Bitcoin and his...
Yeah, I was just going to ask.
I mean, it's good to disagree. Also, never meet your idols, right?
Yeah.
So, but I do believe his writing is incredibly profound, and it's actually had a major impact on how I view risk management. In fact, the name of my company, Asymmetric, is quite literally drawn from a lot of the philosophy that he preaches around, you should be seeking kind of asymmetric upside with limited to no downside, right? But also there's these principles of skin in the game. And so skin in the game is a form of risk taking. And moreover, he even mentions, and I largely agree with this, that candidly, entrepreneurs are probably some of the most virtuous people out there, because the reason all these people have jobs is because they took a risk. Right? Like, think about it. Microsoft, even though they're a gigantic organization, I used to work for them, right? They employ hundreds of thousands of people. And there are probably hundreds of thousands, if not millions of people on the periphery of doing things around Microsoft-related products, right? That was all because Bill Gates took a risk to start this company. Now, we can debate whether it was actually that risky for him, given his background and his upbringing or whatever, but that's not the point. The point is that risk-taking in and of itself is virtuous. And you can see this through I think one of the examples is when you see someone with a scar, they took a risk, right? Whether they were, mountain climbing or skateboarding or playing a sport or just had a surgery that they had to go through, whatever. That scar is a representation of risk taking. And so to me, when I meet other risk takers, I have this kind of natural attraction to them because we kind of see the world in a similar way. Now, this also factors into the concept of risk management, right? And this is where there's a concept that Taleb talks about, which I very much vibe with, which is this concept of avoiding the risk of ruin. And so I think a lot of people think a startup is this binary outcome. I'm either going to start this company, it's going to be huge, or it's going to be nothing. And it's it doesn't really work that way if you can avoid the risk of ruin. And so the morbid example is kind of the game of Russian roulette, where you have a pistol, 6 chambers, 1 bullet. You've got a 1 in 6 chance of losing the game. Yeah, you can keep playing the game, and every time you don't pull the trigger and it fires, you win, right? But the time that it fires, not only do you lose the game, you literally cannot play anymore, right? That is the risk of ruin.
Thanksgiving turkey.
The same thing, right?
Going
Perfect
great
life until it just gets its head cut off, right? And so risk has been so important to me that I actually have it I don't know if you guys can see this. I have it. Yeah, it's probably a bit blurry, but it's upside down. I have risk tattooed on my wrist. So it's as a reminder to me of like that, the virtuous nature of risk, but also maintaining a sense of like presence so that you avoid the risk of ruin and think as you evolve through life, how do you manage risk in an appropriate manner? So that's the long answer to why that is in my Twitter bio. But yes, I believe that wholeheartedly.
There's actually a table of risk, the ethics and foundational asymmetry, where he talks about no skin in the game, skin in the game, and soul in the game. Right. And so referring to, I just have one follow-up question and then we can move on to something else, which is, why do you think so many people with no skin in the game are in charge of the world? And do you think that on some level, do you sometimes sit back and be like, I guess crypto is somewhat of a financial revenge on that, right? But that still hasn't guaranteed a seat at the table or any sort of meaningful change. Of course, there's a personal joy to be had when something that, a bunch of like internet folks memed into $1 trillion asset against every FOMC meeting ever, right? So do you think about that, and how do you think that's changing? Is in the words of Peter Thiel, I guess, is the Truman Show going to end? What is your view on that?
There are myriad examples of folks that are that lack skin in the game, and I promise this won't be a Taleb quote-a-thon, but he uses this phrase "intellectual yet idiot," where it's very easy for, say, politicians to opine about why or why not Palestine should be recognized as a country because they're literally not there. Right? And so to me, I'm like, you have actually no real reason or purpose in beyond just kind of pontificating as to why you are holding this position. This also extends into finance, right? So we saw this in the global financial crisis. I was there live watching this happen. It was pretty remarkable, to say the least. But you basically had bankers and hedge funds and investment firms, et cetera, that took other people's money and put a ton of risk on it, and when it didn't work out, had no recourse. That is not skin in the game. So it actually creates a fragile system, which is bad. Also, it can have a negative impact on policy, like I mentioned, the Palestinian state example. And so one of the things that is fascinating to me about what's happening with kind of crypto and Web3 more broadly is, so Balaji Srinivasan is a good friend of mine. We spoke about this years ago. What is it? How can we kind of get to a source of truth going forward on effectively any topic? And my kind of hypothesis was, well, we can't really rely on institutions, or we can't really rely on politicians, and we can't really rely on the media because they don't have skin in the game. And furthermore, there's no accountability really to their actions or inaction. And so, the engineer in me started thinking like, what if there was a way that, say Bitcoin's blockchain could be optimized for a single source of truth because you have economically incentivized machines to verify and validate truth. Right now, those are transactions, but maybe we can extend that to something like, I don't know, the truthfulness of a particular article, or oracles that are collecting data, whether it's temperature or prices or whatever the thing may be, to help influence or kind of ensure that there's this kind of source of truth. Because at the end of the day, I feel like, at least certainly from maybe a U.S. perspective, my view is that the kind of the Trump campaign and election cycle, and then when he became president, was almost like a verification that we have really no concept of what is true anymore. And that implies that the folks that, like you're describing, the folks that don't have skin in the game, are they going to continue to remain in power? I think there's an opportunity, a window of opportunity to change that. I'm not suggesting that blockchain is going to be the thing that solves all of the world's problems. I'm simply saying that there has to be some sort of almost like mathematically provable, computationally efficient way of deriving or driving towards truth. And that will hopefully drive people out that don't have skin in the game, because the rest of us as network participants actually do have skin in the game.
Yeah, actually, lack of skin in the game, Akshay, it led to a phrase, especially in the Trump era, of post-truth. Remember, post-truth was a phrase which, in hindsight, shouldn't make... What is post-truth? Isn't like truth the end of any conversation? Like, that's it.
Yes.
Yeah.
Yes, it should be, and I think that's exactly the point. And part of the things that we were drafting in this article was, what is kind of the future of trust, or the future of truth, more or less? What does that look like? And one of the things that we were kicking around was this idea of a post-truth era, because truth largely existed from institutions telling you what was real.
Correct.
But we know that we can't reliably trust them anymore. And I'm not just talking about the government. I'm talking myriad institutions, right? And so there's a really good book also by this guy named Niall Ferguson called The Square and the Tower. Highly recommend reading it. It's a historical kind of overview of times in history where centralized power, the tower, so people would centralize power, and then eventually the people in the square would decentralize it. So it was kind of this pendulum swinging back and forth between centralized power and decentralized power. This is not a new concept of this pendulum swinging back and forth. It's happened for thousands of years. And secondarily, it's happening kind of at a global scale really fast. And I think that is why when I say there's this like window of opportunity for what we can do with these kind of permissionless networks and network participation, changing the kind of sources of truth, I think that's a very valuable and potentially rewarding experience to have.
So are you guys working on the blog post again, or is that on the back burner? And
yeah, I mean, it's funny, man. I actually went back to the blog post about maybe 6 or 7 months ago and was reading. I'm like, man, this is really good. And it was also like very spot on, because after COVID, when COVID kicked off, we were just like, yeah, we don't even know. Nobody knows anything anymore. Like none of the data is accurate. Like they don't know shit about masks or no mask. Like, I mean, just none of it made sense. And it was like very consistent with what the kind of the purpose of the article was about. So I don't know. I'll have to talk to Balaji. He is a busy man. So as you're probably aware.
damn.
Awesome. Are you a
trade, you say?
You didn't think, you guys thought I was just going to talk about NFTs and shit, didn't you?
Yeah.
We're like, hey.
Well, hey man, I mean, look, you guys conned me into this, so this is my con right back.
All right, fair enough.
I love it. Is that I don't know what that is. Is that an iPad with the flashlight?
It's the first gen iPad in a frame. No, this is so behind me is we were talking about this I think before the show started. So that is a frame by this company called Mural. I'm not like trying to shill them. I'm just telling you guys what the brand is. And the NFTs in there are my SMBs. So I was very, very, very lucky, or dumb luck probably. One day I was digging through some stuff and I was like, oh, there's going to be this NFT thing on Solana. Made sure to kind of check back on it. And the day that the mint had happened, it was the Solana Monkey mint, and Sol was like $30. And it was 2 Sol per mint, so like $60 US. And so I was like, you know what I'm doing? I couldn't
stop clicking.
I couldn't stop clicking. And I was clicking and clicking, and I was like, nothing's really, I don't know, I guess like, and then I was like, oh, it's in my wallet. Okay, that's cool. Like, whatever. I don't know where it's, by the way, I left and went to go get lunch, came back 2 hours later, and there was still stuff available to mint. So I was like, all right, I guess I'll just keep minting some more. And I ended up minting 33 of them and have a collection of 37.
So does the frame, does it pull it from your wallet, or is it just like a JPEG you load onto a screen?
It's the latter. I bought it and I thought it was like, oh, this is going to be
so
like
embarrassed to say it, aren't you?
Yeah, he's just lame because like
you could see Joe's
literally
face
anybody could just you could be a right click and save as, dude. Really easy, right?
So, do you still actively trade NFTs? Okay, if you had to, so we have minted a bunch of NFTs and all of them have gone to like notional zero. Okay. So, if you had to summarize the one line alpha about the right of how to navigate the NFT markets, what would it be?
Ooh, there's a couple ways. The way I would look at the market today is one, there needs to be additional notional buyers entering the Solana ecosystem, period, to support the kind of deluge of continual NFTs coming into Solana. This is like basic supply and demand, right? Like if you even look at like trading volumes for the year thus far, like they're pretty low, at the time of this recording, certainly. So there isn't this kind of, additional buyer that's stepping into the market to actually prop up prices. That's the same thing with NFTs. They just happen to be highly illiquid, right? And they're also, thanks to Solana, very cheap and easy to produce. And so I think as you're navigating, like if you're looking at it from an investment perspective at this juncture, there's two things I would do, not financial advice, et cetera, but like there are two things that I would do. One, I would own blue chips, right? This worked out extremely well in the Ethereum ecosystem. The other would be for new projects. What I have found some people do, and there is some success to this, but it is completely luck driven because it's randomized, is if you do decide to mint something and you end up getting something that's extremely rare, that's actually something worth holding on to longer term because those tend to hold their value. The kind of like, if you look into the distribution of rarity and price, not irrespective of any project, but most decent projects, the ones that are the rarest obviously tend to hold their value longer. And furthermore, as more and more brands get into the space, they're going to be gravitating towards Solana because when a brand wants to do some sort of like ad activation engagement with their customers, I know this from working in the ad business I've worked at an ad agency, like a brand is not coming in and saying, what's our NFT strategy? And we say, hey, we're going to do a thing on Ethereum. We want to airdrop 1 million, like NFTs, and it's going to cost somewhere between $100 million to $500 million to do it. Like no one is ever going to sign up for that, right? So Solana is going to enable a lot more of these kind of mass production of NFTs. And so that's another thing that you have to recognize is that the concept of an NFT, just as like a traditional JPEG, will eventually become commoditized. And so if you're going to be investing into NFTs, just remember, you're going to be investing into a market that is going to be, there is infinite supply that could be hitting market. I think the key is, again, are you going to be looking for like trying to get the rare thing and hang on to it, or just kind of sit in blue chips?
Joe, I'm a comedian and I have a YouTube channel. What I've noticed about NFTs is, right, a lot of my audience, they hear about crypto through me and they're like, what is this NFT thing? So to me, like the biggest purpose that NFT solves, it's a great marketing tool for crypto. For most people, NFTs is when they hear about it, they get into it. And NFTs is at the end of it, it's a speculative game, right? So you either have such a good time that you're like, how the fuck did I just 7x my way into this? Or you're like, this is the dumbest shit I've ever seen. Why the fuck did I lose all my money? And now there's all these NFT marketplaces where actually the whole way they're advertising is you don't need to get into crypto to get into NFTs. You can just fiat on ramp and you can own this thing, which is just stupid. Like, what are you doing? This makes the least amount of sense in a space that already makes very little sense.
Yes.
Right? Like, it's almost like NFTs are being weaponized as the best marketing tool for crypto, but it's not going to end well for a lot of people who, DYOR is a great phrase, but 99% of people don't do that.
Yeah.
So where do you think this is going to, do you agree? And how do you think this is going to pan out?
So I disagree in the following way. Okay. So I agree that it is a way for, normies and retail and people to get into crypto. But I see that as actually a massive tailwind for crypto adoption. And here's why. So right now there's basically like, the way I've been kind of describing it is there's two major tailwinds pushing crypto and also total crypto market cap, crypto ecosystems, like whatever metric you want, users, etc. The first is the insane amount of money on the institutional side that's entering crypto. So these are literally like funds that have hundreds of millions to billions of dollars to literally buy tokens. So that's a bid being put into the market. There's also a significant amount of money on the venture side that is going to be invested in startups in Web3 and crypto. The second one, which I think is more and potentially the most important, is the part that I disagree with, which is culture. When culture bridges over to a new technology, it makes it normal. And so I'll give you an example. Twitter, for example, in the early years was mostly like Bay Area techies and maybe like technologists more broadly worldwide. It wasn't like, it was used by some news people, but then all of a sudden something happened. And that was Oprah Winfrey live tweeted on her TV show, and instantaneously Twitter became this kind of cultural thing, right? That was accepted, and we should all get on Twitter now because we're seeing this cultural icon use it. That is what NFTs have unlocked for culture, where they're basically saying like, yeah, that like crypto DeFi weird thing, I went to Curve Finance, that website's terrible, like I don't want any, they're not going to, that's not going to get normal people into crypto. What will get normal people into crypto? Culture, sports, entertainment, art, like whatever the thing may be. And this is why I love like what FTX and the guys, Sam and FTX, the guys have been doing with sports, of like just sponsoring like every sports team that they can possibly get their hands on, because you're introducing culture into crypto. And so, yes, people are going to lose money. People lose money on all kinds of stuff, right? People lose money on gambling. People lose money in the Madoff scandal. Like, people lose money in speculation, and that is like part of your risk management strategy. If you come into crypto thinking, I'm going to buy the next Bored Ape or like CryptoPunk or SMB or whatever, like, no, you're not. It's just like, that's a terrible approach to like investing in anything.
Joe, you have a 6,100 member strong Telegram group.
Man, it's fallen off. That's too bad. It used to be like 8,000.
Oh, really? Yeah. Okay, well.
We're going to link it in the description. Let's add some more. Is it gated entry? Like, can anyone enter it?
Yeah. Of course. Yeah, I mean, do you guys know a few people in India? I heard there's a few people over there.
There's some.
We'll see what
Mostly
we can do.
into NFTs, though. Why do you start it? How does it work? How do you think about that group?
Yeah.
Most important question: are we in a bear market?
Question one. Why did I start? Joe's Crypt is what it's called. It's kind of a play on words. When I was the CEO of NodeSource, I'm trying to like go back to this years ago. CEO of NodeSource, the company that I started, I transitioned out of the CEO role into the chairman of the board role, took some time off, and started writing, quantitative and systematic trading strategies for crypto instead of like surfing or mountain biking like normal people, right? I decided to do something nerdy and write software. I used to be actually a trader on a desk on Wall Street where we were literally like manually trading. And we were volatility chasers. We loved trading anything that was super volatile. We didn't care what the stock was. We didn't care what the company did. If it was volatile, we traded it.
Much
That's
like
what
us.
we did. Yeah, and so enter crypto, and it's like volatility on steroids, right? And so as an active trader, it's like the most fun. The most fun video game you could ever play. I was just like trading on, all the degen exchanges like BitMEX and Deribet. Well, Deribet's not like we're like a degen exchange, but like, you know what I mean? Like high leverage and just like trying stuff out. And I was like, man, this is super fun, because if you actually know how to trade levels and trade momentum and read like what's called tape reading, which is pattern recognition of order flow, like you can do really well. You have to be glued to the screen, which is why I ended up writing other types of software to do it for me. But in essence, I was just basically live tweeting or live telegramming my trades. Like I was like, this is what I was doing, and people just started plowing into it, and I didn't anticipate this whatsoever. I was literally just like stream of consciousness, talking about like what I'm doing into the internet to see what would happen, and it kind of blew up. And then furthermore, I started to develop my own kind of proprietary indicators, one that was deeply tied to real-time funding rate for active traders. it was my own thing, and the people in the chat were like, where can I buy this? Can you please like let me use it, this and that? And I was like, no, because I don't want any customers. Like, I don't want to deal with any customers. So the answer is no. And so they kept badgering me, and I was like, look, fine. I had this side project where I wanted to I wanted to figure out how to use Coinbase Commerce, which is a set of APIs to do payments with crypto only. And this was in 2019. So I was like, I just want to get familiar with what payments as a service looks like, or incorporating it into like a SaaS business. And so I launched this kind of Cryptex Pro, which is, it's this funding rate indicator. It's offered up as a service. You pay for it in crypto. There's a bunch of workshops that I did, and like, you know, I was just kind of like doing it because I didn't have a job, was just chilling, like, and figuring out what I wanted to do. And it turned out that it kind of took off as well, which was awesome. I mean, I'm definitely not retiring off of it. I basically put a price tag on there so that people, and I would be like, there's no customer service. I am not responding to support tickets. Like, forget it. Like, you can use it, and it's going to cost this much money, and I really don't care, like, because I'm only doing this because you guys asked me to. And so I think that's one of the reasons why the group grew. I think we were up to like 10,000 at one point. You know, pull back in the market, people start to get, you know, freaked out and leave. They don't want to be in Telegram anymore. Are we in a bear market? Well, technically, if you use the kind of boomer TradFi definition, yeah, for sure. There's a couple of things that happened that I think to me it was very obvious, and I acted on it. I think a lot of other people were maybe like in some disbelief. And the first one was, I think on December 4th of last year, when you see these types of like super aggressive down moves, it's usually the beginning of a downtrend. And that trend could last a month, it could last a year. That's the last levered trade that I've made, was on December 4th, because I got stopped out. I have not put on a levered trade since then. I have not, because I'm like, this market is fucked. Like, I don't want to trade in a choppy kind of sideways, potentially downtrending market. In addition to that, and I think this is the key thing that has influenced, you know, how I'm thinking about just investing and trading in the market overall right now, is in early January, Jerome Powell, Fed chairman, in the minutes that came out, basically alluded to, we're going to be raising rates. And so when you have, this is a very simple strategy to understand: high inflation, higher interest rates, lower asset prices. It's that simple. Now, that doesn't mean it'll last indefinitely. We saw this in 2006, 2008. Like, you can have interest rates increasing and the stock market can still go up, and other assets and risk assets in general. But the initial kind of shock is asset prices are lower, right? Because you have higher rates. So that's just been like my position on the market. Is like, you know, there's a lot of other stuff that's been happening: geopolitical, COVID, you know, commodities, supply chain, all this stuff. Bottom line is, if we raise rates, which we will, by the time this airs, we should have definitely raised rates. You're going to have lower asset prices. And I think that's getting priced in. But more importantly, how do we roll out of the bear market? I think you'll probably start to see in the second half a couple of things. And again, can't predict the future, but this is kind of how I'm positioning myself, is I think you're going to see crypto decorrelate from traditional markets again. And there's a couple of reasons for that. One is we're seeing a major acceleration in the movement away from the US dollar. So I think just yesterday I saw India and China are talking about doing, I'm not sure what the banking system, it's SWIFT-like, I guess, but it's going to be so that there can be trade in between China and India that does not rely on the US dollar. We saw Saudi Arabia and China now strike a deal to have yuan and oil, yuan basically oil purchased in yuan, effectively removing the petrodollar, right? On top of all this, the SWIFT sanctions have made people realize, like, wow, my fiat currency could be weaponized. Maybe I should start using crypto as a means to protect myself as a citizen, not necessarily as like an oligarch, but literally as a citizen, right? So I'm seeing like this acceleration towards crypto potentially happening. And in the second half of the year, I think you're going to start to see funds like myself and other funds really start to deploy capital into the space, because what we're talking about in terms of the investment opportunity is as lame and as cliche as this sounds, it's so Silicon Valley HBO series one, season one is or season two is like, this is potentially a new iteration of the internet, and you have the potential to invest in that and be a network participant. That's like a generational opportunity. So any pullback in these markets, I'm buying them with size because like this is, in my view, going so much higher. So if you take the total crypto market cap today, call it roughly $1.8 trillion, $2 trillion, depending on the day, gold is $20 trillion. Gold. It's a brick. It's a rock, right? Like it's valuable because we say it's valuable, right? But it's a brick and it's a rock, right? $20 trillion. Crypto is less than, a tenth of that, right? So do we think that the total crypto market cap can 5x in maybe the next 5 to 10 years? Yeah, I think there's a high probability of that, right? And so that's why I'm saying I think like short term, it's hard to watch your portfolio performance go down. You have this negative wealth effect that affects your behavior on investing and spending. I totally get that and empathize with that. But if you zoom out, this is probably going to be one of the best buying opportunities that you'll have in crypto and Web3 overall.
So I should buy.
So basically what I'm saying is like, just buy it. Yeah.
Buy.
Yeah, one of the things that Tanmay and me have is like, oh, do you hold? And that's like nice, but you suffered 90% drawdowns and then you overtrade. And so like, what is the, what is the median person do that is in between these two extremes? Have you already thought that through, or you don't have to answer if that's to each their own kind of thing?
Well, so this is like literally
like you buy puts at 64 and just as a holder.
So there's like I get these questions from folks in the trading chat on Telegram all the time, and it's all like they're always like, should I like sell this now, or should I buy this now, or like I'm down bad, or like should I take profits here? And I'm like, only you can answer that question. Like literally only you, because like your financial situation, your personal life, your bank account balance, your appetite for risk, there's no one else on the planet that has that combination except for you. Now, there are some things tactically that you can do. One is never become a forced seller. The folks that are like OGs in crypto that have made inordinate amounts of money have never been forced sellers. They've never just gotten completely wiped out. And so I think one of the I talked about this on a podcast a while back about like the exchanges. One of the reasons they offer so much leverage is that it's just like going in a casino, right? You're like, man, this slot machine, dude, if I hit this slot machine, I can make $1 million. But if you understand the the odds and probabilities of a slot machine, like they are super skewed in the favor of the casino, right? Leverage is the same thing. Exchanges make money on transaction fees. So here's a whole bunch of leverage. It moved 2%. We're gonna force a transaction on you and take a percentage of that transaction, right? It's part of the business model. I'm not saying it's predatory, because there are like, if you look at FTX's liquidation engine, it's actually very fair. But there are other ones out there that are absolutely predatory, right? And so I think that the key here is like, do not become a forced seller. If you get into a position where you're levered long and the market keeps coming against you, crypto has the ability to go right when you think you're like, okay, this has got to be it. It goes further, right? Like it will always do that to you. And so what I recommend is never become a forced seller. Hold tokens that you actually think are going to be valuable, genuinely, intermediate to longer term, and then find ways of lending and staking those things, right? Like some of the things that I do, I just literally keep compounding all of the lending and staking of tokens. I paid no attention to the price because we're in a bear market. Like it doesn't matter what the price is. It's lower than where I want it to be, right? But if you're lending on it, you're earning additional tokens, you're building up your bag, so to speak. The same thing with staking and compounding staking rewards. Like that, those are like the smart things to be doing, because we know that crypto is super reflexive. You have these huge run-ups and these kind of like fading, long, painful, sometimes painful bear markets, and then it just rips again. And even absolute shit coins that you thought were dead from 2015 are like somehow up, 300%. Like it never fails. And so what I'm getting to is don't become a forced seller and start to like build up your stack through passive income, whether it's through lending or staking. These things are out there across many chains, tons of opportunities and stuff in Solana specifically.
All right. One of the things we love to do is have our guests not just shill their portfolio, but shill the jobs that are open roles in their portfolio companies. So people from our community can apply. What are the most interesting companies you're investing in? Are they hiring? What are they hiring for? Anything you want to talk about?
They are all hiring. Every single one of them is hiring. Honestly,
we didn't prepare Joe for this at all.
Well, so no, here's what's interesting. So I'm an investor and advisor to Sam at Zebek Protocol, and he's the only founder I've met that's like, no, I'm good on the engineering side, because he's from Nepal and he's got like a brother who has like a engineering, organization or something, and he's like, no, I'm good. And I was like, you're literally the only person that I know that isn't trying to hire for every role right now, right? Although he is also hiring for obviously other roles. So, but yeah, this is literally in alphabetical order, so I'm not even like picking favorites here. There's a company called BetDex. This is a decentralized kind of betting protocol. The guy who's behind it started FanDuel and has been in like sports betting forever. They're building on Solana. They're basically hiring every single role you can imagine. Block Asset. This is an NFT platform for athletes, and they're also launching athlete tokens. They have a huge kind of following in the UFC space, but I believe actually they're looking into cricket, and they're also looking into golf and football and others. Bridge Split is a NFT lending protocol. So this is like take your SMB, park it as collateral, lend against it. Founders are just amazing people, super sharp, also hiring for tons of different roles. Recent one that just announced is Dialect. So this is a company that is kind of doing like, you're familiar with the company Twilio. They're kind of doing something akin to that, but on Web3. So it's basically on-chain messaging. So you could have in-app messages, you have push notifications, but it's all on-chain, built on Solana. What else? There's a company called, this one's cool, Fast Break Labs. So this is a company that's building a virtual basketball association where you can basically I think the impetus was the founder wanted to kind of one day own an NBA team, but there's no way he could afford to do it. So he was like, why not create it in the metaverse? So now if you're really into basketball and wanting to build out some really cool metaverse video game / NBA basketball association, that one's really cool. Hyperspace, I know I'm almost done. I'm skipping some because I'm like, this is gonna take forever. Hyperspace it used to be called Soul Analysis, and so these are guys.
We met them.
Yeah, they're awesome.
We met them in Lisbon.
Their story is amazing. I saw their pitch deck and they were like, we tried to emit NFTs for the DJ and Abe drops, and we were unable to, so we decided to build a data analytics company to figure out how to better mint NFTs, and now they've got this really amazing platform. It's super cool. By the way, I think every company I just mentioned is remote, because you kind of have to be at this point, right?
Amazing. We have our own talent network, by the way, that we have Cash who runs it exclusively, where we run bounties, and the bounties help us discover awesome talent, which, bounties I think are the cleanest signal versus say things like resumes and CVs and things
totally
like this.
Agree.
And so the top of the funnel is bounties for us, and then that filters in a set of awesome candidates, and then we help connect them with the projects in the Solana ecosystem. So we'll also put up links to all of those in the description.
Amazing. And by the way, the just really quick, the bounty thing, that is actually, in my opinion, the future of how to hire people. Especially in this industry, I've always been a big fan of I literally don't care where you went to school. I don't even care if you went to school. That doesn't matter to me. Can you do this job, or do you have a GitHub profile that I can kind of see what you've done or whatever? Love that approach. And last but not least, we are hiring at Asymmetric. The bar is high.
All right, there we go. How do they reach you, Joe?
You can reach me on Twitter. Yes, my DMs are kind of a shit show, but you can try there, and then of course you can hit me on Telegram too.
Joe, you once said that the crypto market is formulaic. It's the most formulaic market you've seen. Like, what do you mean by that?
Yeah. Great question. Yeah. So the reason I say that the crypto market is the most formulaic market I've ever seen is when I used to trade. I mentioned this I think earlier. Like when I used to trade on the desk on Wall Street, the kind of skill that we were taught on the desk was this thing called tape reading, and you're basically like watching like real time order flow. So basically, like whenever the sales of like a stock happen, you can see the price, whether it was higher or lower, and like the volume associated with it. And when you start to kind of watch the order flow enough, you can recognize certain patterns of like changes in direction of the price that you can trade on very quickly. Crypto is formulaic in the sense that the patterns that exist are on charts. And so there's this kind of like, this joke that I always run because I always hear these naysayers about like, oh, technical analysis doesn't work. And I'm like, works all the time in crypto, all the time. Now, technical analysis or the formulaic nature of these charts, it's just a probability of an outcome. It is not a guarantee, right? So there have been many cases where, kind of a pattern may exist that, doesn't actually do what you would have the expected outcome to be. But more times than not, it does. And so one of the reasons I say crypto is super formulaic is that prior to like, say, 2020, if you were watching what was happening in 2018 and 2019, basically everything was trending down, right? For the most part. But you could see individual assets have like these crazy spikes and then they would just fade, right? And I built a strategy to optimize looking for what I call like these volume spikes. So you could see like right before it's about to go up, there's this volume coming in. That's a pattern. It's super formulaic. It was across almost every shitcoin that was trading on Binance. Like every one of them was doing it. In addition to that, you can see the same type of like formulaic patterns exist, whether it's fractal in nature or it's TA related. So that's what I mean by that is that like if I've looked at so many charts in my life at this point that like I can just look at a chart and kind of immediately synthesize what the opportunity is if there is one, and then evaluate the probability of it. And so for me as a trader who's been doing this a long time, that's what I mean by like formulaic is like I can kind of just see the formula unfolding in front of me of like what could potentially be a high probability outcome.
Akshay, can you learn a thing or two and apply it to our trades? Because Akshay tells me like 2 trades a year and they're both bad. Joe, you've traded across like crypto and traditional finance, right?
Oh yeah.
I have 2 YouTube channels. The second channel began talking to, on the first YouTube channel, I do gaming and I do vlogs. So I got a lot of young people who came in, and then I'm like, here, now think about your life and your money, because people don't teach you that stuff, especially in India. They don't teach you that stuff. So I began by talking about traditional finance, how to start investing, just basic compounding. So there's a lot of folks who in India who trade in the stock market. They still they're a little skeptical about crypto. There was a lot of regulation worry. If you had to make a few arguments to folks who are trading stocks, saying, hey, here's the difference between what stock trading is like, what crypto trading is like, and here's why you would enjoy this more. If what would you tell them? What are the primary differences, and how would you red pill them into crypto?
It's very simple. Do you enjoy sleeping or not? That's the difference. That's it. Like if you like sleeping, trade stocks. If you don't, trade crypto. Like pretty straightforward. That is a major difference. And actually, I mean, I'm joking, of course, but it actually has a major influence on how to trade those various markets, right? Because the fact that crypto doesn't stop means you have different types of risk. So in trading stocks, for example, like the stock exchanges closes on Friday and then it opens on Monday in most cases, right? Well, you have what's called gap risk, where if it closes on Friday and then it gaps up or it gaps down on Monday, like there's nothing you can do about it, right? You just have to own that risk over the weekend. Whereas with crypto, there's no gap risk, right? Unless like the exchanges literally go offline or, decentralized exchanges, protocols fail or whatever, right? For the most part, there's no gap risk. I think the other thing to recognize about stocks is, and I'm going to catch some shit for this, but that game is largely rigged. And I use that term loosely.
All right. Now we're talking.
Not fired again. I don't know if anybody's going to invest in my fund at this point. No, look, the reason I say that is that it's not like rigged as in, like a casino is rigging sort of slot machines in their favor, right? It's rigged to the extent that a retail investor is largely not going to recognize either A, that the trade execution that they're getting may not be the best, or the way that they're being presented investment opportunities is abstracted in a way that makes it feel easy and fun and not risky when in fact it is. I'm looking at you, options trading on Robinhood, right? Like Robinhood did an amazing thing where they abstracted away the complexity of options trading by asking you the very simple question: do you think this is going up or down?
Up,
Right.
down.
Like brilliant execution on the product. But what it led to was a lot of people losing a lot of money. Again, take your own responsibility. You should know what you're doing. You're speculating. This is like part of the game, right? So this is not just I'm not like bashing Robinhood per se, but what I'm getting to is that those types of markets, they have this kind of inherent sort of there's infrastructure underpinning traditional stock markets, and I'm giving you mostly the U.S. perspective here, that is not actually the most like beneficial to you. In addition to that, like there are algorithms out there that will completely destroy you. Even if you think you're the savviest trader possible, they are smarter and faster than you. So like it's very difficult to gain like a true edge in trading stocks. Investing in stocks is very, very different, but trading stocks is what I'm talking about. With crypto, there's a big difference as to why it's not as rigged, even though people want to cry about price manipulation. And let me just go ahead and debunk this for the last time ever. You cannot have a manipulated market if the market is not regulated. It's by definition impossible. So forget ever saying that there's price manipulation in crypto. It's literally impossible by definition.
So that kind of coordination is hard.
Well, the technical definition of market manipulation is you're manipulating a market that's actually regulated with rules. There really aren't a lot of rules in crypto, certainly in decentralized finance, right? And so what I'm getting to is that the notion that price is manipulated is a weak excuse for someone losing on a trade. And so like with crypto, I think one of the cool things about trading crypto versus stocks is with stocks, you basically have like the New York Stock Exchange or the NASDAQ. Like those are like the only places you can like trade stocks. And I'm paraphrasing a little bit here, but like with crypto, how many exchanges are there? There's like 300 or something. I mean, how many decentralized exchanges are there? We don't even know because we can't keep track of them. That's what's really cool is that like in traditional finance, if you're a high frequency trading shop that's genius PhD algorithm, it's quants, you can co-locate your software to run right in the exchange and the speed of light is the bottleneck for you. You have a huge advantage against the retail guy. But all of a sudden, if you have N number of exchanges globally that are trading the same asset, you don't have that edge anymore. And so I think that that's what's really cool about crypto is that, is it to say that the high frequency trading, kind of market makers and whatnot of the world aren't going to come to crypto? No, they're here and they're coming. But it also means that you have at least a fairer chance of executing your own manual trading strategy because there's so many different venues as to where you can actually trade crypto.
And how long do you think before the market gets, almost as saturated as the stock market? Like there's a period of arbitrage right now, right? Like there's information asymmetry. People still gotta, a lot of traditional institutions still gotta learn how crypto works. Do you think about this? Like, how long does retail still have an edge on institution?
Yeah, I thought, and by the way, that's I think an important point that for non-traders or retail traders that may not realize. I think you said something important there, which is you should be trading only if you have an edge. And I think edge has a very specific meaning in the context of which you just described that. Yeah.
So great question. So the first one is like when institution commoditize everything, right? Soon would be my answer. If I had to put a time frame on it, I would say within the next probably 4 years. I think there's a window of opportunity of the next 4 years. So this is actually part of like our edge at Asymmetric is we are not trying to compete with Jump and Citadel. Like those guys are going to crush it on the HFT and market making side. No interest in competing with them. The difference is there are crypto native strategies that just don't exist in traditional finance, that the Jumps and Citadels of the world are going to have to either figure out how to execute on or just ignore and do the market making because they make so much money on the market making. Crypto native strategies are what we are focused on and where I think people can have an edge longer term if you're going to be doing sort of automated strategies or systematic strategies or quantitative strategies or these crypto native pieces. And so if you're a retail trader today, going forward over the course of like the next 4 years, what will likely happen is there are these things called like basis trades where you can basically short the future and long like the spot asset. And then, when it comes to, the end of the futures contract, when it terminates, they kind of zero out and you can collect the kind of the premium or the spread between the two. Those are annualizing at like 30 to 50% per year, which is insane. Those are not going to last. Like, trust me, they're not going to last. And so for folks that are like building a business on like basis trades, like they're not going to have a business in 4 years. Just like a lot of the high frequency trading firms in the late 2000s dried up because their strategies were not as good to compete with like Renaissance Technologies, D.E. Shaw, and Citadel. And so I guess my point that I'm making is that the window is probably the next 4 years, could be a little bit faster, could be a little bit later. But I do think that the opportunity set gets even broader if you understand how to build a crypto native strategy. And here's why. My fundamental view is that every financial contract will move on chain, period. We are like at a fraction of the types of contracts that exist on chain today. Those will all be moving on chain. And then as those move on chain, the institutional flow follows it. So this is why I think total crypto market cap can go up way more than 5x if this is true, because what you're talking about is a market of $900 trillion potentially, moving on chain. And so if you can adapt to those types of opportunities with your strategies and not try to compete on technical analysis or market making, you'll do great.
Amazing.
Damn. So buy then.
In summary, buy.
What are you investing in these days? Is there something specific that you're looking for with regards to the fund? Are you bullish on some particular ideas?
I am investing in, I want to say almost everything, which is like a terrible answer. But here's kind of like my hypothesis here. The rebranding of the word crypto to Web3 actually expands the aperture of the opportunity set for investing in crypto, right? We went from like Bitcoin to Ethereum to like tokens to DeFi, and now we've got like NFTs and video games and metaverse and DAOs and infrastructure and payments, right? Like Solana Pay recently, like it's just getting huge. And so part of our fund strategy is to identify where those intersect and cross over. And so, some people say like, well, how can you like be an expert in all these? I'm like, well, I can't. That's not the edge. The edge is to actually recognize where they cross over, because ultimately all of this stuff is converging. So for example, you can go to a video game that's a Web3 video game that uses NFTs that may have a swapping function built into the game, right? Like that is like a convergence of 3 different themes that I just mentioned. And so what I'm looking for are like genuinely just killer founders that want to build really cool stuff, have the capability to do it. I know everybody probably looking for these folks, right? But more importantly, like, how are you thinking about building and sort of monetizing responsibly in an open source environment? I think this is the one kind of advantage or benefit that I have to founders, is that I've built an open source business. It's really fucking hard. It's easier with tokens, I will tell you that much. But the types of businesses that are thinking through like, okay, I met with this, actually today I met with a founder where he was like, we're going to build a protocol first. Anybody can use it. It's open source. There'll be a token, but we're going to build the UI, like the vertical integration on top of it. That's the business, right? And to me, that was like the aha moment where it's like, yes, protocols are great, but then what, right? Because the protocol is all open source, and my view of the future of open source is all open protocols. So that's great. They're all going to be kind of interacting with each other and composing on top of each other. The businesses or startups that need to be built will be the ones that own that kind of vertical integration, where they're providing the underlying protocol, but they're building that killer app on top. So my take, like the net here is that if you're focused on building really amazing applications and use cases, we want to be involved in that. Of course, we're very much interested in protocol and infrastructure because it supports all of these other applications. But those are the things that I'm really keeping my eye out on.
Wow. There's, Joe, I mean, it feels like the wide range of conversation. There's, philosophy and risk and trading and investing and starting a fund. It felt like we didn't go deep enough in each of these. So we're going to have to do a part 2 for this. But for today, Akshay, I think we got to wrap up. But this is our longest this is easily our longest podcast, if you don't count the Balaji podcast, because with Balaji 4 hours is too short.
Yeah, exactly.
But
you need like an intermission and a nap. I mean, he's a good friend of mine, and he's honestly the most intellectually intimidating person I've ever met. He's so smart, and you just like, he keeps talking. You're like, how do you know all this stuff?
It's just such a prolific thinker.
Yes.
But this is our second longest podcast, and it's been insane fun. We got to do a part 2 whenever we got time. Joe, thank you so much for joining us. We're going to link everything Joe spoke about as much as possible in the description. Do check it out. Do apply for jobs, and hopefully Cash and the team will be able to send some great talent across. And have a good night, Joe. Thank you so much for joining us. We will see you on another episode very, very soon.
Thank you.
Joe.